Hello and welcome. My name is Chris Cam with Mining Journal, and with me I have Rule Investment Media Chief Executive Rick Rule. Rick's recently signed a partnership agreement with Aspermont across both the Rule Symposium and then the Aspermont series of Mining Journal and Mining News Select. Across those events, Rick's going to be sharing his wisdom with us, but we're pleased to say we have a little bit of a curtain raiser with an interview series virtually with Rick. Welcome, Rick. Thanks for joining us.
Chris, thank you for having me.
We're going to talk in this interview about the bellwether copper, touted as the way to play the energy transition. What a lot of the research that we've been reading has suggested is that a run in copper predicted to be probably 2025, even second half of 2025, I should say, has actually been brought forward, and people are looking at it as in happening right now in front of us. Do you read that kind of research? Do you share that view? Where do you see copper in terms of an energy transition fueled boom?
Chris, I'm 71 years old, which is old enough to be smart enough not to answer the question around time. So let's get that out of the way. I love copper, and we don't have enough time for the whole interview, but here's a few things about copper. The first is that we have been, for 30 years, underinvesting in copper exploration and copper development. And no matter what we do, we're going to have supply shortages. That's baked into the cake. We are using a lot more copper than we're producing, and building a new copper mine, finding it, financing it, permitting it is a very, very, very long process. No matter what we do, we're going to have a shortfall. Why? Well, part of it is the electrification of the world in terms of the way you and I live, electric vehicles, stuff, the normal stuff of your conference. A much more important determinant is the fact that there's 1 billion people on Earth with no primary access to electricity whatsoever. People who want to live like you and I, another 2 billion people on Earth with access to only intermittent or unaffordable electricity. The electrification of the poorest of the poor over the next 25 years will, I think, have the same impact on copper markets that the urbanization of China did, which is to say profound. The difference is that as China urbanized, we were living off copper surpluses that we had discussed in earlier decades. We don't have those surpluses. What could go wrong? That's easy. A recession. It's been a long time since we had a synchronized global recession. You can cut supply if you cut demand temporarily and you don't get a price response. I think something else needs to be said about copper. It's a really good business. Copper deposits tend to be large. They can be fairly high grade. There are any number of copper mines in the world that make $1 million US dollars a day, which is to say that you don't get yourself stuck in the small mine trap. Copper mines can often be big, lucrative, multi-decade affairs. So for every reason in the world, I love the copper business. As I say, what could go wrong? A recession. A recession doesn't end the outlook for copper. It delays the outlook for copper. And even at age 71, with less time on Earth, I know that I'll go longer than the recession, and my copper will reward me very well.
Okay, you talk about copper mining and mines being good investments. We've asked you previously about gold. There are different ways and more flexible ways to be involved in the gold sector when you look at buying physical and buying ETFs and then the range of different equities. How do you compare that with copper, and where do you see the real value in terms of getting exposure and leverage to this uptick in the copper price?
For mortals like you and I, buying physical copper is a tough thing to do in the sense that the storage costs relative to the price appreciation are high. I think for most investors that you want to be in the senior copper stocks. You want to buy the market beta. You want to buy the best of the best. Among other things, those are very long-lived reserves. And you don't have to worry too much about when you are right, because most of them pay very good dividends. The time value of money question gets solved simply because you get a current yield in them. For those investors who are more speculative and those who are willing to do the work, probably Mining Journal subscribers, people who have access to information around very large exploration stage stories or development stage stories, the alpha, of course, will be made in the smaller names. But that performance, I think, really is only available to those investors who have the schooling to use the information, have the willingness to do the work, and have the financial and mental wherewithal to handle both volatility and cyclicality. I love searching for alpha among the copper juniors and the copper explorers. It's treated me extremely well, but I have also worked extremely hard, been extremely lucky, been patient, and been tenacious. Investors need to ask themselves about their timeframes, their tolerance for risk, their financial capabilities, and they need to answer the question based on their own self-assessment.
It's interesting that you bring up doing the work or having access to the research or the information even being available. Obviously, copper being a great way or the way to play the energy transition, it isn't the only way. And we hear about a whole bunch of battery minerals, of critical minerals, of various other names given to less well-known metals that are out there. One of the issues with them is market size often, and therefore manipulation from major players. Another issue is opacity. And another one is just the research being available and the knowledge base being there. All those things thrown into the mix, Rick, are there any battery minerals, graphite, cobalt, lithium, and their ilk, that you particularly like for any given reason?
I like large deposits. I would like a large sand and gravel deposit. I'm agnostic as to how I make my money, but I like large deposits. I tend to like out of favor materials. And mercifully for me, all of the battery materials seem to be coming out of favor. Nickel, yesterday's darling, is of course a pariah now that the Indonesians are overproducing it. My belief is that now that we're cutting into nickel production capacity around the world, the beginning of the end of the bear market is in sight. Probably 3 years away, but I'm building now a knowledge portfolio of high quality sulfide nickel deposits around the world. I've only pulled the trigger on one, Life Zone with Kabanga in Uganda, a truly tier one deposit. But I suspect that 3 years from now, nickel will be regarded by speculators as a 4-letter word. In other words, it'll be truly out of favor, truly hated, and I'll be lining up to buy some nickel stocks. Lithium, at long last, has come back to earth. Yesterday's market darling, a company that saw the number of companies a commodity that saw the number of companies looking for it explode from sort of 20 to 200 or 250, most run by people who couldn't spell lithium at the time they made the conversion. So you saw the lithium price go up, 600% and then fall by 75%. We went looking for lithium. We found a lot of lithium, but we were never short of lithium. We were short of lithium refining and processing capacity. This will sort itself out over 2 or 3 years too. My suspicion is that 2 or 3 years from now, lithium will be hated. Wonderful time to step up and buy some. I'm attracted to the rare earth oxides. I'm attracted to graphite, but I need to tell you with graphite, I'm really struggling to get up the knowledge curve. It isn't just the stuff you put in pencils. There's a lot of complexity with regards to product type, metallurgy, things like that. The whole battery space is going to be a very good place. Again, we equate this in the West with some little tiny battery that goes in a phone or a power wall for your house or an electric vehicle. Electricity and distributed energy storage is critical for the ascent of humankind. It's critical for increasing the living standards of the poorest 1/3 of humanity. This is a job that we've done we've made great strides in the last 40 years. We have 25 or 30 years to go. And this 25 to 30 years is going to see a huge explosion in technology around the distribution, the consumption of electricity for the poorest of the poor, which is a wonderful thing for those affected and a wonderful thing for investors.
Rick, that's all we've got time for. I am very heartened to hear you say you have trouble with graphite. It makes me feel better as a person. We'll look forward to catching up with you properly across the finance event series in Miami, London, Sydney, and Perth throughout the year.
Thanks for the introduction to your audience. I look forward to seeing you at those events.